Like most businesses, 2020 has been a wild, wild ride for those of us in the agricultural industry. Going into 2020, we knew it was going to be a very critical year for our farm economy. After all, we'd had several years of depressed commodity prices. We'd battled trade wars, and many of our farmers were looking at a situation with those depressed prices over time that they had some depleted working capital and cash flow challenges, and just looking at some challenging financial conditions heading into 2020. But in reality, we had some optimism as we entered this year. After all, we had just completed three major trade deals. And while the world economy was slowing, it was still growing. And the expectation were that production expenses would continue to remain relatively low. But then the coronavirus hit. And as a result, we had a lot of major challenges in our overall economy. With regards to the food sector, we know that many of our plants had to shut down. We had some closures out there in many parts of the economy, including the restaurants and schools and travel, and many of the sectors that purchase agricultural and food supplies. We didn't drive as much as many of us stayed home to work, and therefore that impacted the ethanol demand and obviously had impacts on our grain markets. And then we had uncertainty with our labor supplies, as well as what was going on potentially with trade. And as a result of all these factors, during the early part of COVID-19 hitting, we saw just across the board major plummeting of farm commodity prices. But as the year moved on, towards the middle to latter part of this year, our supply chain was very resilient. It did rebound, and food processing facilities reopened. Was able to move the product into the various markets. We had to pivot because instead of a lot of this product going to the food service sector, we had to move it more towards grocery stores. And towards the latter part of the year, we did see some expansion on the trade front, which, needless to say, had a big impact on some of our commodity prices. And as a result, USDA is projecting currently that for 2020, instead of a big drop in our farm sales, that on the national level, that they'll come in fairly flat, with gains in crops offsetting our expected declines in livestock receipts. But of course, the big story for 2020 in the farm economy have been government payments. You can see here the different payments that we've received here in 2020. We had those coronavirus food assistance payments, which referred to as CFAP, were a big part of it. We had the last payment from our trade assistance or MFP payments, and the PP loans. And when you add all this together, we've got close to $50 billion, more than doubling the level that we had in government and farm payments in the preceding year. And as a result, there's no doubt that that's having a big impact on farm income. Right now, USDA is projecting that in 2020, instead of farm income being down 20–25% that was projected early when COVID hit, that we're looking now at potentially farm income on a national level to be up a whopping 43%, pretty much rivaling our all-time high in 2013, but close to 40% of our net farm income will be in the form of government payments. A lot of attention again this past year on trade, and we know that over the past several years we've had a lot of challenges on the trade front. We've had trade conflicts, the ongoing trade war. We've had periods when our dollar's been appreciating. It certainly hurts our competitiveness in international markets. A lot of international competition out there, from supplies in South America to, again, our competitors in Europe and other parts of the world. And COVID not only impacted our economy, but had impacts around the globe, and the concerns about a global economic recession. But despite all these challenging factors impacting trade, it's been somewhat surprising, and just shows you how resilient our export market has been, is that over the past 4 or 5 years, that despite these challenging factors, agricultural exports remain relatively flat. So far in 2020, through the first 9 months, looks like exports are coming in pretty much at the same level that we had the year before. The gains we see in the pork, dairy, and corn sector in terms of growth in U.S. exports. And if you look at our individual markets, again, our major export markets out there for U.S. agriculture, you can see that they're down. But of course, most of the attention, a lot of the attention this past year has been with our agricultural exports and the trade environment with China. This is looking at U.S. exports to China over time, and you can see the dramatic increase leading up to our all-time high in 2012 and 13 when we had over $25 billion of U.S. ag products moving to China. In the midst of the trade war, we fell actually below 10 billion, rebounded a little bit in 2019. But you recall back in January, the Trump administration signed a phase 1 trade agreement with China, where the Chinese agreed to import about $36.5 billion of U.S. agricultural products to China in 2020. Through September, we're at around 12.1 billion. It's up about 37%. Most of our ag exports to China typically occur in the latter quarter of the year, especially when our grain harvest comes into play. And as a result, the last couple of months, we've had reports that exports have really increased to China, primarily grain exports. So, probably anticipate that by the end of the year, we'll be above 20 billion, but still a lot of analysts believe it will be a challenge. We're going to fall short of that 36.5 billion that was part of the phase 1 agreement. What about the Kentucky farm economy? Looking at our cash receipts over time, every year we talk about that high watermark year of 2014 when we had an all-time high of 6.5 billion. We've had some challenges in recent years, falling down to 5.5 billion last year. And again, back in April, May, when we were seeing the early impacts of the coronavirus on commodity prices, we actually, as a department, projected that as a result of those low anticipated prices, that we could push this number back close to 5 billion, given that price environment that we were facing. But again, with the trade expansion, with some weather events around the globe, some pickups in certain markets around the world, we are actually projecting right now that cash receipts for Kentucky agriculture for 2020 will come in relatively flat, around $5.5 billion, with most of the gains being from our grain crops, offsetting lower anticipated receipts for livestock, as well as tobacco. Again, the distribution of those receipts, despite a very tough year for poultry, we anticipate that poultry will still remain Kentucky's largest agricultural enterprise, followed by corn, soybeans, equine, and cattle. And just like the national picture, the big story in Kentucky ag this year has been government payments. If you look back at all the different payment programs from the FSA as well as NRCS, 2019, we actually had a little bit over $300 million of government payments, which kind of rivaled the latter years of the tobacco buyout era when we had government payments around $300 million. But with the increase this year's primarily the CFAP payments along with the MFP, we're looking at the potential for our farmers here in the Commonwealth to receive over $500 million in government payments for 2020, some $200 million more than we received in a relatively high level year in 2019. Again, this is doing a lot to support net farm income. This slide is looking at net farm income adjusted for inflation. If you look at over the past 6 years, we actually had a little bit higher mark in 2019. A lot of that was driven by some pretty decent grain yields. And as a result, though this year with our flat cash receipts and expectations that our production expenses are not going to change a whole lot, when you add in this boost in government payments, we're anticipating that net farm income is going to exceed that $2.2 billion that we had in 2019. Push up there towards that $2.5 billion level, which would be the highest level that we've seen here in the state since 2013. What about 2021? I think expectations are that given some of our meat supplies out there, as well as grain supplies and the trade market, or the trade expansion we're seeing late in this year, that's going to lead to some improvement in commodity prices for 2021. Don't expect a lot of changes in our production expenses, as well as land rents remaining relatively stable. But I think all of us realistically know that we can't expect these government payments to continue at the level that we've seen the past couple of years. And as a result, there's the potential, if we have some very large crops or if meat supplies increase globally, meat production, that we could see some downward pressure eventually on prices. And the concern is that a lot of these producers who may have come into 2020 with some financial challenges are going to potentially see these materialize back again in 2021 if we don't see expansion on the export front. So some good observations from 2020, but again, this uncertainty, these government payments certainly come into play for 2021. As far as the wild card environment, certainly a changing political environment in Washington, D.C. with a lot of new faces. What does that mean for future trade policy, future trade relations? What about government regulations, taxes, immigration policy? There's been a lot of discussion on the political front about market concentration. And again, these government payments, how is that environment going to change with potentially with the new actors in Washington, D.C.? The macro factors, again, a lot of attention to the impact of COVID-19 on recovery as the vaccine becomes available. How fast will our economy rebound? How will that affect our agricultural markets? Monetary policy is always important with the level of interest impacting land prices, as well as exchange rates, which we know have a big impact on our exports. And then just fiscal policy, stimulus, money being available to support our farm economy, as well as our rural economy out there, infrastructure dollars in the future of farm programs. And as always, the weather, big factor, uncertain factor that will have an impact on commodity prices. So again, 2020 has been a rocky road. It's been kind of a roller coaster with a lot of good things happening towards the end of the year, going into 2021, but still with a lot of uncertainty on some of these wild card issues as we look forward to events potentially impacting the farm economy in the coming year.